Is the Glanbia Performance Nutrition brand portfolio still the gold standard in the space? On November 10th of 2021, Glanbia updated the public market by releasing its 2021 quarter 3 earnings report. So I dug into that financial information, also combed through the associated earnings conference call, and included relevant, publicly disclosed news source information that I found across the internet to obviously update you on Glanbia and specifically Glanbia Performance Nutrition, but also kind of pull this back and give you a ton of strategic insights around the global active and sports nutrition markets. So let's just start with a quick update on the financial data. Glanbia, in terms of wholly owned revenue on a constant currency basis, did have 2021 Q3 revenues that were up 15.7%. What kind of comprised that was volume increased substantially, up 18.2%. They did have some pricing pressure of 3.4%, and then acquisitions did boost revenue 0.9%. Now, for those that are not too familiar with Glanbia, they are made up of two large wholly owned divisions. Let's cover Glanbia Nutritionals quickly first, because I don't particularly spend too much time personally on this division, though it's extremely important to the overall business. I will, though, have some extra commentary on this division later in the content. Glanbia Nutritionals, which is made up of two kind of subdivisions, U.S. cheese business and Nutritional Solutions. That revenue was up 12.6% year over year on a constant currency basis, and that was comprised of 18.2% volume increase. They did have pricing pressure of 6.6%, and they benefited from acquisitions in the comparatives of 1%. Growth strategy overall in this division is focused around protecting its house, which is mostly the protein solutions business, expanding the core platforms through international innovation and mergers and acquisitions, and focusing on sustainability, strategic partnerships, and global reach. Now, the other division, Glanbia Performance Nutrition, their revenue was up a substantial 23.2% year over year on a constant currency basis, coming from both strong pricing and volume increases at 18% and 4.4% respectively. They also benefited 0.8% from the acquisition of LevlUp, an esports gamer nutrition brand that was announced last quarter. Now, within Glanbia Performance Nutrition, they break this up into Americas and International. Start at Americas first, because that makes up a little bit more than 2/3 of the total Glanbia Performance Nutrition revenue. In quarter 3 of 2021, Glanbia Performance Nutrition's Americas revenue growth was driven mainly by the performance nutrition brand portfolio, as consumption trends have remained robust with growth across all key channels. The lifestyle brand portfolio also delivered growth in the Americas region, with the Think and Amazing Grass brands performing well in response to increased consumer mobility and an ongoing focus on health and wellness. Now, the other side, International, does make up the remaining kind of less than 1/3 of Glanbia Performance Nutrition's total revenue. In 2021 quarter 3, the international side of Glanbia Performance Nutrition did deliver strong revenue growth as well across all regions, with the Asian and Middle Eastern markets being particularly solid. European markets and the direct-to-consumer business also performed well in the period, delivering strong growth. Route-to-market changes and improved revenue growth management processes implemented as part of the Glanbia Performance Nutrition Transformation Program has provided a strong foundation for growth. While I mentioned a few of the other Glanbia Performance Nutrition brands, the portfolio has really been focused on two brands specifically. Almost 3/4 of the total Glanbia Performance Nutrition revenue is made up now of Optimum Nutrition and SlimFast. Start on Optimum Nutrition first. They saw strong performance overall, again in tracked channel consumption, up 18.6% year over year. The brand has benefited from its strong position in the category, expansion of consumer occasions, specifically plant-based and functional energy, and ongoing marketing investment in broad channel positioning. Now, SlimFast consumption was down 8.8% in the last 12 weeks in early October as weight management headwinds are still causing pressure on the brand. While Glanbia Performance Nutrition waits for the consumers to re-engage meaningfully in weight management, this is expected to happen in Q1 period this year. It was interrupted last year, so 2022 Q1 should be a strong period for all brands focusing on weight management. So Glanbia Performance Nutrition, through its SlimFast brand, has focused on a ton of brand activation and new product innovation getting ready for this. I want to transition a little bit into marketplace dynamics. Glanbia would be considered one of those companies that are much better positioned compared to the overall market, some of their kind of emerging smaller competitors on the brand side. And that's because they own a large portion of their supply chain. They have global manufacturing production capabilities. They quite honestly own the cows. They have global flavor capabilities, global innovation capabilities, production capabilities, which around the mid-teens percentage of Glanbia Performance Nutrition's total ingredient needs does come from the nutritional solutions side of Glanbia. That's not including the protein side of it that does come from the US cheese side, aka they own the cows. But even with all that control within the supply chain, they are not insulated fully from what's happening with the challenging marketplace dynamics. But the pricing increases that Glanbia Performance Nutrition has been able to institute in 2021 and still seeing volume increases, and they're expecting to increase prices again in 2022 and still seeing inelasticity to the prices. They feel like that is still going to be a positive attribute for them. If you assume additional volume growth plus a lot of the efficiencies and things that are happening around the transformation side of Glanbia Performance Nutrition, they do expect to be able to offset all of the inflationary challenges that they are expecting to experience throughout 2022. Now, I want to shift this last part of the content into a conversation around capital allocation. Outside of the typical increased capital expenditure spending, shareholder dividends, and share buybacks, Glanbia has started to get aggressive with bolt-on acquisitions on both the Glanbia Nutritionals and Glanbia Performance Nutrition side. As mentioned earlier, last quarter, they did announce their acquisition of LevlUp on the Glanbia Performance Nutrition side. That is a esports gamer nutrition business. But they also announced this quarter that they acquired a U.S. food ingredients company, Packmore, for $52 million. Packmore has production and innovation facilities in Indiana and Illinois and provides a number of solutions for the healthy snacking category. Now, that's all great and well, but what will push some of their appetite for M&A further? Glanbia has been strengthening its balance sheet, and that will continue to happen off of its organic operations. But they're going to need something a little bit bigger to push some of the leverage ratios down for investors to be comfortable with them going out and doing something very large in the mergers and acquisitions market. And Glanbia actually announced that in a coinciding press release with Glanbia having the intention to sell its 40% holdings in Glanbia Ireland to Glanbia Co-op for about $350 million USD. I wanted to provide a little bit of background on Glanbia Ireland for you. Glanbia Ireland is a joint venture owned 60% by Glanbia Co-op and 40% by Glanbia. Glanbia Ireland is the largest milk producer and grain buyer in Ireland, producing a range of value-added dairy ingredients and consumer products, as well as selling farm inputs. Glanbia Ireland operates 11 processing plants, 52 agricultural retail branches, and has over 2,000 employees. So what's the strategic rationale for the sale? Focus. This is the next stage of Glanbia's transformation journey, which is focused on driving growth through market-leading positions as a branded owner and ingredient solutions provider, playing into strong underlying consumer health and wellness trends. Glanbia will increasingly focus on its global nutrition strategy, and the proceeds from this sale will be mostly used for growth opportunities. This will allow them to get aggressive and kind of stay aggressive with bolt-on acquisitions if they see those in the market, but also go after very large mergers and acquisitions activity at or above the level of $500 million. So I just want to end on some final thoughts. If you did consume last quarter's content, you might remember this. I actually want to talk about a question that was asked during the earnings call, and this was around the synthetic bio industry and if that would have any effect on the legacy whey protein exposure that Glanbia is built around. And I stated in that last Glanbia earnings content video that I thought they needed to get a lot more in tune and kind of really figure out how are they going to play a part in the future of the functional CPG space. The Glanbia and Glanbia Ireland decoupling transaction does give Glanbia the opportunity to think more clearly about its place within the functional CPG ecosystem. Outside of Nestle, I can't recall too many multi-billion-dollar companies that have been able to look inward and realize things need to change and actually put a plan in place and execute successfully against that. I applaud Glanbia for this pace of change that they have undertaken over the last few years. If you enjoyed this YouTube video, hit that like button to support me. Another way to support me would be to hit the subscribe button. I do have a goal to hit 2,000 subscribers. You could be a part of that goal. It would mean a lot to me. About 4/5 of you that are watching this YouTube video are not subscribed to me, which makes me extremely sad. But I just want to thank you again for tuning in, and I'll see you guys on the next one.